Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very good morning. Welcome to Chartbusters. We'll highlight all the buzzing stocks of the day. It's a Monday morning. We're trading mildly in the green, but we have come off the high point of the day. I'm Nigel D'Souza, and with me is Mangalam Malu. Hey, Mangalam. Today, the star of today clearly has to be ITC in terms of the contribution chart. You know, if it wasn't for ITC, we would have virtually been in the red as we speak. But the mid-cap index as well has come in for some selling. Though you get the stock right, you're making good money.
Absolutely, you get the stock right, you're making good money. But today, I mean, heavyweights Reliance and HDFC Bank are pulling Nifty down by about 20 points. ITC being the key outperformer there. But, the expectation, Nigel, is that after VST Industries results that came by over the weekend, which were phenomenal, about 7-8% volume growth is what the initial estimate is. People are now looking at ITC. Add to that the valuation gap that it has with Hindustan Unilever at around 40-45%. Is that something we're looking at as well? The street is worried that, HUL doing 12% volume growth on a benign base going forward. This the benign base which was there now becomes an albatross around HUL's neck, whereas ITC has low base because of the cigarette volume decline that we've seen earlier. So this is something that we're witnessing, and as a result of VST's result, it's also rubbed off on something like Godfrey Phillips, which is currently at the high point of the day. So Godfrey, VST Industries, as well as ITC, both of them moving higher, and ITC's underperformance vis-a-vis HUL is something that we have to watch out for as well. But the 11,000 put, that one continues to see some writing. It is the expiry week. That is one mark we'll be watching out for.
Absolutely. So let's kickstart the show then with all the top stories.
Absolutely. A lot of top stories that we're watching this Monday morning. Wipro under pressure, post a mixed first quarter, miss in margins and weak commentary on verticals like manufacturing, healthcare and communications weigh in on the stock, down 3%. HDFC Bank too trades in the red, though off the low point of the day. Loan growth picks up in the first quarter, but asset quality as well as margins deteriorate.
And UPL Searches announces a deal to acquire Arista Life Sciences in an all-cash deal of around $4.2 billion. The management says that the deal will be EPS accretive and expects consolidated EBITDA margin of around 20 to around 22% by 2020.
In a positive for paint stocks, GST Council reduces rates on paints from 28% to 18%. Consignor Rack Management tells cnbc TV18 that they are working towards passing on the price hikes to B2B clients. Rates of consumer durable products to revised to 18%.
And Bata surges post GST rate cut and strong results. The revenues come in line, but an operational beat was seen. South Indian Bank tanks after a weak quarter. The bank reports the worst gross NPAs ever. The loan growth comes in at an 8-quarter high.
SpiceJet, that one surges. Arbitration tribunal rules in favor of the company, rejects former promoter Kalanithi Maran's claim of over 1,300 crore rupees.
Well, let's pull up a contribution chart of the Nifty. As we told you earlier, the Nifty is up only 21 points, but ITC single-handedly is pulling the Nifty up by nearly around 24 points odd. So if it wasn't for ITC, the Nifty would have been in the red. You also pull up the Nifty bank contribution chart. Well, out there, that's trading with a bit of a negative bias, but the biggest weight on the Nifty as well as the Nifty bank is HDFC Bank. Now, that's being an underperformer today. It's under some pressure. So if it wasn't for HDFC Bank, the Nifty Bank would have been higher with a gain of more than 50 points odd. So just keep an eye out on that front. HDFC Bank dragging the index in today's trading session. That's a good point. Highest weightage on the Nifty is HDFC Bank, 10.24%, and that's an updated number. So just keep an eye out on that front. And when your star performer is not performing, that's putting some pressure. It's telling you that the middle order, or maybe those that are coming one down, will have to perform as well. How do you trade the Nifty, though? From here, we have Ashwini Gujral who joins in. Hi, Ashwini. Less than a convincing start. We're holding in the green, though. What would you do with the Nifty at these levels?
See, it does not look like we are going to get past the 11,050, 11,070 zone. So now the way it's playing out is that whatever is impacted by GST cuts is moving up. The rest, which is the financials, they are moving down. So that way, chances are that the stimulus is getting balanced off by techs not performing and banking not performing. So it's basically a consumer type upside that you can see. Also from higher levels, shorts are coming in, and we just had the Nifty futures at a small premium of 3-4 points. So that way the market does not look very strong or convincing to cross the 11,050-70 zone. In fact, on the banks, we had some rally from the lows, but today, the private banks are lower, and now PSU banks are also joining in. So that way, financials may not be able to pull up their load. So Bank Nifty, we are now short on with a high of the day type of stop, because the market breadth is again now falling. But overall on GST hopefuls or GST beneficiaries, you can get long. Volta is a buy with a stop of 565, target of 590. Bata is a buy with a stop of 860, target of 895. And L&T Finance is a buy with a stop of 159, target of 173.
All right, Ashwini, hang in there. In the meanwhile, Nigel, you were saying that will the 1-down, 2-down batsmen do the batting for the Nifty when the openers are not performing? The 3-down batsman, which is ITC, which is performing right now, I'll be very interested to see whether it is promoted after today's performance to 2-down, because remember, during the quarter, HUL's market cap did cross that of ITC. Currently, the difference is 10,000 crore itself, so that is something we will watch out for. Ashwini, but a lot of these tobacco stocks, they're doing very well after VST Industries reported their numbers, the likes of Godfrey Phillips, VST Industries, as well as ITC. Your take on these stocks and the pair trade between HUL and ITC, do you think there is one out there?
See, I don't think it's a pair trade, because ITC is not that sort of a consumer stock where people have to buy it, etc. Plus, it remains on the radar of tax guys. So that way, it's a big underperformer. Today, it's done 4%, but can it be at 320, 4 weeks from now? HUL, I think, can be much higher 4 weeks down the line. So that way, maybe it creates a bit of bounce in FMCG, but I don't think there's a whole lot to go by. So I would still go with HUL on declines. The other question was?
The other question was in the tobacco sector itself, VST, Godfrey Phillips, as well as ITC.
Well, just because Godfrey Phillips is kind of mid-capish and it's fallen a lot more from 1,500 to 700, if you want to play a strong pullback, Godfrey Phillips is a bit better. But ITC is again, that 15-20% type of stock where it falls to 250, 260, it becomes a buy. It gets to 290, 295, it becomes a sell. If you buy at 290 and then you get stuck, then there's a problem.
Okay, all right. Thanks so much for that, Ashwini. Well, moving on then. The intercorporate agreement, a contract between the Indian banks, will be signed and publicly released later today. Top banking sources told CNBC TV18. Now, this agreement is intended to replace the JLF that the RBI recently did away with. Lata has more on this.
This can be a landmark agreement in the history of Indian banking. Now, the immediate trigger that has led to the birth of this intercorporate agreement, basically a contract between banks, is the February circular of the Reserve Bank of India, which disbanded what was the earlier Joint Lender Forum. Now, why do you have these consortium of banks or contracts of banks? Because all loans are given by many banks. So if a borrower defaults, necessarily banks have to get together and resolve it. In fact, the February 12th circular mandates that even in the first instance of default, banks have to get together and put in a resolution plan. Now, how do you get together? It is to serve that purpose that this agreement is being signed today. It was mooted by Finance Minister Piyush Goyal, and there has been on the same day that the AMC and the AIF and all were announced by the Sunil Mehta committee. On the same day, the intercorporate agreement was also planned, and over the last 3 weeks, banks have been having hectic negotiations on finalizing the contract. The board of every bank has to vet the contract. Now, what does the contract require? One, that any agreement by 66% of the banks by value of a loan has to be endorsed by all the banks. You cannot have a dissenter. If there is a dissenter, the dissenter has some rights. He can sell the loan to the lead bank at 15% discount. Alternatively, he can buy back all the loans from all the banks and say, I'll resolve it single-handed, in which case he has to pay a premium of 25%. Alternatively, the dissenting bank can sell it to anybody outside, a bank or an NBFC at a pre-agreed price, at a price between them. But he can't sell it to an ARC. Now, let me tell you that this is what I heard as the rules of the intercorporate agreement when I last heard it. We don't know what the final form will be. We will know that today when it is revealed. In all probability, the IBA, the Indian Banks Association, will call a press conference in the afternoon today to announce the details of this agreement. It may be landmark in the history of Indian banking. All loans are going to be resolved under this agreement, or it may be a non-starter like the previous JLF was. We have to wait and see.
Our radar right now is Just Dial. They reported their results. We have the CFO of the company joining us now. Thanks a lot, Abhishek, for joining in. Now, the performance was okay. The revenue growth has been double-digit in the first quarter. Can it improve from here on? What should the street expect for FY19?
Revenue growth, yes, it was at about 11.3% for this particular quarter. If you notice, this particular double-digit revenue growth was highest in last about 8 to 9 quarters. Definitely, we are on track of improving these particular growth rates further. As we had mentioned in the past that somewhere in mid-teens is what we are targeting to achieve for FY19. So last couple of quarters gives us adequate confidence that we should be on mark to reach those particular growth levels.
But Abhishek, what led to the sharp margin expansion, and is there any reason to believe that it is not sustainable going ahead?
See, EBITDA on an absolute basis had about 77% strong year-on-year growth for this particular quarter. Adjusted EBITDA margin stood at about 29.5%. Slightly margin in this particular quarter was on the higher side due to a couple of factors. First was advertising spend, which was about 9.5 crores for the quarter. If advertising spend were to be at a run rate of about 17-18 crores, I think sustainable EBITDA margin should definitely be about 25-26%. And there is inherent operating leverage in the business. So as and when revenue growth accelerates, the margins could expand to current levels and would be sustainable as well.
You know, Abhishek, the growth on your cumulative app downloads as well as unique visitors is trending lower. So what kind of target do you have on paid campaign growth and unique visitors growth going forward?
In terms of unique users, we would want it to stay upwards of 25% year on year for coming quarters as well. And if possible, accelerate even further. On paid campaigns, as I mentioned earlier, whatever mid-teens growth that we are targeting, we think that part of it's half of the growth could come due to campaign growth and rest could come due to realization growth.
But if you could help us out, what's the outlook on ad spends and sales additions for the remainder of this fiscal?
For ad spends, last full year we did about 65 crores. We definitely intend to spend a higher amount this particular year. There could be lumpiness in quarters where we have our mass media campaign running. So 8 to 9% of the top line is what internally we think we would want to spend for the full year. In terms of sales additions primarily we want to do in our feet on street cold calling team, which has been giving us very healthy revenue growth. We have already added about 700-800 feet on street over last 2 to 3 quarters, and ensuring that the productivity remains intact, we would want to add further in that particular team.
All right, Abhishek, you know, but the concern is that perhaps you have in excess of 1,000 crore cash, and this is post the buyback. The street wants to know, why not a larger buyback instead?
See, on the cash on books, the maximum that we could have gone for this particular buyback was around 227 crores. So the board decided to go ahead with about 220 crores. That was also in line with 205 crores of operating free cash flow that we generated last year. Yes, the objective is obviously that whatever incremental free cash flows are getting generated, we would want to return it back to shareholders in absence of any inorganic opportunities. You rightly pointed out that we would still be left with a good, very healthy treasury. So there aren't any specific inorganic opportunities on our way. We do keep looking for any such opportunities. Right now, the cash obviously continues to remain on our balance sheet and provides us with good financial stability.
All right, thanks a lot for that good financial stability. It will be very interesting to see where exactly do they recognize the money that they get from the cash, because I'm looking at the other income for Just Dial. Last June, it was 26 crore per quarter. Now, last March was 16 crore, and now it's come down to about 8 to 10 crore rupees. So if they have 1,000 crores of cash, even if they earn about 7 to 8%, they should be getting around 80, 90 crore. But turns out that at this run rate would be around 40 crores. So it'll be very interesting to see where exactly is the income that they generate on the cash that they have is recognized on their books. But Nigel, you are spotting a company?
Yeah, well, I'm looking at, UPL is the biggest gainer on the Nifty. That's up close to 5.5% approximately. But, we're looking at the smaller company. It's Uniforce Enterprises. I think we should get that up for you on the screen. It's a listed company. And why are we looking at Uniforce in relation to UPL? Because I'm just looking at it, the market capitalization of the company is only around 200 crores. Approximately 200 crores. It's seen a sharp correction from the top. But remember, it holds 5% stake in UPL. And that 5% stake is valued at around 1,450 crores, very, very approximately. So effectively, the company is trading at nearly around an 85 or 86% discount. It's marked as a promoter, so you'll say, well, that they'll never sell this entity. But in these sort of days, it's a bit of a trading move that people normally spot. Since no one has yet spotted, I just said that, we'll tell the viewers about this one. When UPL pays an average dividend of around 5 to around 7 rupees, they'll get, maybe around 10 to around 14 crores approximately. Just an interesting spot. And focus on the back of a strong showing in the first quarter of this year. To discuss that and more, we have Mr. Sumit Kapoor, the CFO of the company, who joins us on the phone line. Hi, Mr. Kapoor. Thanks so much, sir, for joining in. Well, you've delivered a 35% growth on the top line. Wanted to clarify, this top line growth includes the radio business? And if not, when do you start consolidating the radio business in your numbers?
This growth basically is coming out of our existing TV business, including the new channels that we have added in last financial year.
Okay.
And radio is primarily pending the regulatory approvals, which though has been taking a little bit extra time than what we had envisaged. But we hope that it should be closed in first half of this financial year.
All right, first half of this financial year, Sumit, but let's talk about just your organic business itself. 35% growth in ad revenue, nearly 140 crore in terms of quarterly run rate. Is that likely to sustain going forward? Can we expect, say, 600, 700 crore in terms of top line by the end of this fiscal? This is only your current business that I'm talking about?
Yeah, so we have been actually talking about for last 6 months about a 20 to 25% CAGR in our revenue over next 2 to 3 years. And if you look at it from that perspective, it is definitely supposed to take us beyond 600, 625 number for sure.
All right. Sumit, if you could help us out with what's the debt in the books currently and what's your borrowing rate?
So our borrowing rate is roughly about 9% and total debt is somewhere in the range of 90 to 95 crores.
Will you have any more debt on your books once you consolidate the radio business?
So radio business definitely will bring in additional debt because the deal is worth 1,600 crores, of which debt will definitely form a substantial portion.
How much will that be?
But otherwise, if I look at it, it's primarily going to be funded by debt. So it's about 1,500 crores, which is going to come by way of debt, which is including the money which is going to be put by promoters because we are not diluting.
So 1,500 crore debt at, say, 9% that you borrow. What is the EBITDA of that radio business? What we're trying to get at is that radio business going to dent your EPS in the near future?
So radio business in itself, if you look at it, is earning a handsome EBITDA. Barring the last quarter of the last financial year, they have been making EBITDA returns of almost about 40% in their business, which is a very strong traction. In terms of EPS or in terms of overall potential, if we see, we can say that over a period of time, we can probably see mechanisms to replace this debt, which will be very, very EPS accretive.
Okay, all right. Very quickly, if you could tell us, Sumit, what's the current market share?
Market share of?
Market share, also if you could give us the market share in the regional channels of the company.
So I would say we have about 14 channels, of which in about 11 to 12 channels, we are strong number 1 or strong number 2 in the market, respective markets.
All right.